Guys, on this video, I'm going to be sharing an interesting trading setup on the Woo network. But before we touch up on the core concept, guys, I just want to let you all know that the only reason as to why this token surged by over 25% of its value in one day is because of the Binance funding announcement. And for those of you who do not know the background side or the fundamental side of this token, it is very simple to understand, guys, but there is a bit of confluence you need both from the technical and fundamental side. And let me start unraveling each and every one of them in depth so that going forward you'll exactly know what to expect from this token, and much more importantly you will understand what is the core essence that is driving this token. First and foremost, guys, you need to understand that Binance and the Woo network work hand in hand, and supposedly, or at least according to Binance, Woo network provides active liquidity for more than 40 plus trading exchanges, teams, wallets, and decentralized apps. So obviously the connection is deep rooted and mutually beneficial, and moreover, Binance has even invested in this network, and I think by the previous report, it must be around over $30 million. So essentially, what I'm trying to say is that they want this token to be up, especially whenever they are looking for an exit. So, like, it is quite natural, guys. If you think about it in terms of like this, like if you buy something, obviously you want it to get inflated in price, right? Right? That is just the way the human nature works, right? Like that is the core reason as to why people buy assets and hold on to them. So that is what has occurred, and this 26% value or the surge that has occurred is purely driven by hype, and there is just no justification behind it, and that is just the way it works. But the thing you need to understand is that whenever this kind of thing occurs, especially on the smaller time frames, it just opens the door for all of the traders to make the most out of the situation, and that is why we are looking onto this setup, especially for the short term horizon. First and foremost, guys, I just want to grab your attention and redirect it to the daily time frame, because here the red line, which is the 200-day moving average, tells us everything we need to know. Like the trend is, of course, on the longer time frame steadily up, and each and every single time we saw a breach, it was only temporary and it was just quickly rebounded, and thanks to continuous inflow of funds it is still going higher. But you need to understand that the support region, or the accumulation zone to be more precise, with this token is not exactly mimicking a textbook example, guys. Like the support, instead of being flat, it is just a bit angled, so it is clearly in a trend. But even within the trend, guys, the zones of support and resistance are much more easy to plot, and that is the advantage of blockchain technology, because no one can tell us or mislead us with their actions, because everything we need to know is just a click away. And from the current region, guys, this is what the current active trading zones look like. So from 60 cent to $1.40 mark is the current trading range, and of course there was a peak breakout early on, but as we can clearly see, it just rebounded back, because that is what happens when the market just outright fails to comply with reality, and that is just what we saw there. Just some massive liquidations up, and reality bringing the price back down, and it got slammed pretty hard. And right now also, guys, following the current surge from these funding rounds, it has just hit a very critical resistance zone, and there is really no narrative or anything happening on the network to support this trend, and that is why the reversal is very near. And just remember, guys, even if the price breaches the $1.30 mark, it just doesn't mean that a new bull trend is in place. It is just temporary. Like any kind of break around the current price region, even if it breaks $1.40, it just means that the whales are trying to control the price by setting up a trap, bull trap to be specific, and nothing else. So, of course, I'm not saying you shouldn't place any edge. Like, that is why the futures were invented, right? Like the USD perp futures. And it does make sense to edge yourself out on those levels. But just like I mentioned, guys, my money is on the short side, and that is basically derived from the way the market structure is skewed. And just like I said, very thin order flows above the current region, plenty of room towards the downward direction. And as far as the target goes, guys, the minimum lock-in amount I am looking for is around 80 cents. So that is exactly near the 200-day moving average. So I'm just trading it back towards the mean. And even with that conservative target, we are talking about a pure profit of what? Without any leverage, the profit would be more than 30%, which is indeed huge. And considering it just moved 26% in one day due to one announcement, I think it's a no-brainer to see why the trend will reverse in the near future. So just because it broke the double digit mark, do not think that the trend is here to last, because on the probability scale, that is not the case. And of course, all the things on paper might sound cool and sophisticated, but in reality, there is nothing there to support the prices at that level. So, as always, technical analysis always wins, especially when it has this kind of confluence. And given the fact that this is an intraday trading setup, I don't think you have to wait for long before we know who's right and who's wrong. So, that is where the fun essentially lies. And since I reveal all of my cards beforehand, I think it won't be a problem to follow along, at least on a virtual account, so that you can see once you get rid of all the noise and just focus on the few important things such as market structure and momentum, how easy things become. So you don't need all that ridiculous sophisticated systems. Instead, all you need is common sense, fundamental understanding about the markets, and then everything else just falls into place, guys. And enough with the theory in a nutshell. Wood trade is likely to crash by over 30%, and regardless of what oscillators or moving average or trend trading system you use, this is what every technical aspect is suggesting out there. So clearly there is a skew present and the media is saying otherwise. So that is also a big end. And given every fact of information available publicly out there, guys, I think it is very easy to follow the breadcrumbs along. So do with this information what you will, and let us see how it unfolds in the near future. And I encourage you to come back to this video after a few days and comment down what you thought right at this moment and once it unfolded. So that's all I ask from you guys. And as always, if you have got any questions, feel free to leave a comment down below. Subscribe to our channel to get all the latest updates. See you guys on the next one.